This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by...
Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus service is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NBR.
Driving the Dow, the index dragged lower by earnings from Verizon, Travelers, and Johnson & Johnson. And IBM, which reported results after the closing bell, could add to the misery tomorrow.
Oil Slick, Halliburton, Schlumberger, and Baker Hughes all post strong results. But it's not just the American energy boom that's helping propel profits.
And staying warm. What's behind the shortage of heating fuels across some parts of the country and a rise in prices? We have all that and more tonight on Nightly Business Report for this Tuesday, January 21st.
Good evening, everyone. Thanks for joining us. On this cold and snowy day for much of the eastern part of the country, IBM, one of the priciest and therefore one of the most important stocks in the price-weighted Dow Index, tried its best to warm things up on Wall Street. The world's largest technology services company reported better than expected earnings in its latest quarter. It made $6.13 a share. That's 14 cents better than the consensus forecast. But the good news sort of ended there. Margins narrowed ever so slightly, and revenue declined 5%, ending about $500 million short of estimates. That sent shares initially lower in late trading today, as you see on that graphic. Josh Lipton joins us now from Silicon Valley with more on IBM's earnings. Josh, what is the key takeaway from these results?
Yeah, Tyler, listen, IBM reports, and the big number investors focused on, $27.7 billion. Now, that was IBM's revenue for the fourth quarter, and it was a miss. Analysts covering IBM, they had wanted to see more like $28.3 billion. IBM CFO Martin Schroeder, on the call with analysts, said some of IBM's business segments appeared solid, like software, where revenue was up 4%. Says IBM has moved more aggressively into the cloud. Services saw revenue also edge higher, but the pain was really in hardware, where revenue tumbled. There were reports say that Lenovo is interested in IBM's server business, which the company, has been looking to divest. Importantly, though, besides that disappointing revenue number, IBM, though, did reiterate its commitment to generating at least $20 in EPS in 2015. Tyler?
All right, Josh, thank you very much.
Our next guest is a big believer in Big Blue. IBM is on his buy list. Joining us now, Dan Morgan, Senior Portfolio Manager at Synovus Trust. And Dan, thanks for joining us.
Hi, Susie.
All right, so make your case for owning IBM. What does it have going for it?
Well, there's no doubt that this quarter in terms of revenue was disappointing, and hardware continues to be disappointing. But you look at some of their growth drivers in terms of some of the new initiatives that they've gotten involved in the last couple of quarters. Very good growth in their cloud business. It was up 69%. You look at business analytics, was up 9%. Smarter Planet was up 20%. So that's really going to be the key for them going forward, is obviously continuing to show progression in the software area. That was up 4%. The big drag, as you know, Susie, is hardware. That was a really tough area this quarter. And if they can spin off to Lenovo like they did their PC unit, which was a great move when you look at the problems that Dell and HP have had in that space, that might be the key for them going forward to try to really jumpstart revenues again.
Dan, you say that Ginny Rometty's success or failure will be determined by her ability to drive the top line, but so far that hasn't happened. 7 consecutive quarters of declining revenue. What's going to change that?
Well, hopefully some of these growth drivers, like I mentioned, to try to get that going again. And potential improvements in China and some of these other markets. The most recent quarter, I believe, their emerging markets were down significantly. So hopeful that that can get going for them. But really, her success, I think, is going to be determined, like you said, the ability to drive revenues and the ability of these new areas, these growth drivers that I just mentioned, to really get going and pick up the whole ship to rise, so to speak, which has been a struggle for IBM, as you mentioned, on the top line.
Dan, you just mentioned China, and IBM does get a lot of its business from China, although we heard over the weekend that even China's economy is slowing down from that big engine of growth that it had. I mean, to what extent is China a big drag on IBM's earnings?
Well, obviously on this quarter, that particular unit hurt a lot. So, China is a faster growing economy than the U.S., but they're not growing as fast as they have in the past. I don't think it's a drag. It's something that hopefully down the road will pick back up again. But, you know, it was a tough quarter, but you look at the installation base, the huge amount of markets that IBM is involved in, the tremendous reoccurring revenue through their services business. They're really kind of just a steady Eddie technology company, and you know, hopefully China will recover, and that will help them going forward.
Ms. Rometty had a couple of tough acts to follow in Mr. Palmisano, Mr. Gerstner. How do you grade her tenure so far, or is it just too early to grade it at all? And if not, why not?
Yeah, Tyler, you're right. I mean, the jury is still out. I mean, again, we got to see how these things work out for her going forward. She's been there, what, 2 years, a short period of time. So it's still too early to see if she can really pull this off and really get that top line going.
Real quickly, Dan, we just have a few seconds left. You have a buy on the stock. That's where we started our conversation. What's your target for 2014 in terms of IBM stock at 189 trading now?
Yeah, Susie, I'm not an analyst, so I don't have price targets. I'm a portfolio manager. We have about 355,000 shares of the stock, so we still believe in it in the long run. It's a conservative, patient, dividend technology stock. That's the best way to sum it up.
That's fair enough. Thank you so much, Dan. Dan Morgan, Senior Portfolio Manager at Synovus Trust.
Before the bell, 3 more Dow components reported their latest quarterly results, and the earnings were pretty good. But the outlooks for the future? Well, they weren't so great. Travelers made about $1 billion in profit by charging higher premiums and paying out less in claims, but travelers and other insurers are likely to face increased price competition in the year ahead. Verizon netted $5 billion in profits, signing up more wireless and Fios customers, but investors are worried about tough competition from the likes of T-Mobile and Sprint. And net income at Johnson & Johnson up 19% on strong sales of prescription drugs and medical devices. But its full-year earnings outlook was below Wall Street forecasts. But J&J's CEO Alex Gorsky says he's optimistic about the future.
What we've seen is a slower but steadier uptake among some of our medical device areas, particularly in our orthopedics group in the fourth quarter. So we're watching it. We're cautiously optimistic that some of the uptake and the demand that we're seeing is related to people getting a little bit more certainty, and frankly, to some of the enrollment taking place in the Affordable Care Act. But we'll have to watch and see over the longer term.
Shares of all 3 of those Dow components fell more than 1% today.
Well, that mixed bag of earnings led to mixed results on Wall Street today, with the costliest blue chip stocks ending the session lower, including Visa, Goldman Sachs, and IBM, as we mentioned earlier. The Dow was the only one of the 3 major averages posting a loss. Let's take a look. The Dow lost 44 points, but the Nasdaq was up by 28, closing at a fresh 13-year high, and the S&P added 5 points.
Blue skies ahead for Delta Airlines. Lower jet fuel costs and higher revenue from more ticket sales helped the airline to almost $3 billion in profit in its latest quarter. Shares rose 3.25% today after the carrier told investors that it expects 3% growth in the current quarter by focusing on higher revenue on the routes it already offers. But some of those flights may be having a bit of a rough day. A massive snowstorm on the East Coast forced the cancellation of almost 3,000 flights and caused another 2,000 delays. Jim Corridor of S&P Capital IQ says today's storm is more bad news for Delta and other carriers.
We're off to a very poor start to a winter season, so there's going to be obviously tens of millions of dollars of additional costs added, lost revenue opportunities as passengers cancel their flights. So yeah, this is another in a string of bad weather-related events for the airlines.
Forecasts call for upwards of a foot of snow all the way from Philadelphia up into New England by Wednesday morning.
That snowstorm, along with a blast of Arctic air across much of the country, is sending temperatures lower and the price of natural gas higher. There are also reports of a shortage of propane. So what will that mean for the cost of heating your home this winter? Sharon Epperson has more.
This winter storm is causing shortages of heating fuels in some parts of the country and a sharp rise in prices. A shortage of propane gas supplies forced Ohio's governor to declare a statewide energy emergency in order to expedite propane shipments to suppliers. More than a third of households in the Midwest use propane gas to heat their homes. And propane futures traded over the counter and cleared through the CME Group have risen 10% in the past 3 months. Even before the recent cold spell, a huge corn crop harvest had significantly increased the demand for propane in the central United States. Propane, a byproduct of natural gas, is used in the equipment that dries corn. Meanwhile, demand for natural gas is skyrocketing as well, and prices are following suit due to the record cold this winter.
It's having an impact on what we've got supply-wise to last us through the winter. So whenever we get hit with a really cold storm, do we have enough to make it to the end of the winter with the current supplies of natural gas we have? That's why, as the cold weather comes in, we spike up.
Natural gas supplies declined by the most on record last week as heating demand hit nearly 5 times historical norms for this time of year, according to a Credit Suisse report. More than half of the country uses natural gas to heat their homes, and the Energy Department predicts that consumers will spend about 13% more on their natural gas bills this winter than last. I'm Sharon Epperson for Nightly Business Report. Back to you.
Well, good news about forecasts for global economic growth. The International Monetary Fund just raised its outlook for worldwide growth for the first time in nearly 2 years on rising consumer demand and higher inventories, especially in the most advanced economies.
That will certainly be one of the topics of conversation in Davos, Switzerland this week. It's where political, business, and entertainment leaders from all around the world are meeting for the annual World Economic Forum. They'll be talking about economic policy, philanthropy, and new business deals. Andrew Ross Sorkin is there with more.
4,000 miles from New York City is Davos, Switzerland. It's Europe's highest city and also the birthplace of many modern winter sports. The town itself has a permanent population of 11,000, but come January every year, many of those residents bolt. Making way for the 2,500 or so participants of the World Economic Forum that arrive by train, car, and helicopter. They come from more than 100 different countries, heads of state, business leaders, and celebrities, all to tackle some of the world's biggest problems.
The United States is doing a little bit better than the average of countries that got hit. Europe stands to have a recession that by some measures is as bad as the Great Depression. I mean, they're a lot richer, you can't exactly compare, but it's, pretty severe.
The theme of this year's meeting, Reshaping of the World, Consequences for Society, Politics, and Business. A theme that will be tackled by the likes of CEOs from Morgan Stanley, Goldman Sachs, UBS, Marriott, and Google, just to name a few. And with such high-profile attendees all in one location, security is extremely tight. From snipers on rooftops to heavily guarded checkpoints, getting around isn't easy.
Anytime you have the chance to answer the questions of who, when, where, why, and how, you give an adversary or any kind of a threat agent an advantage to do something. And so by its nature, I think you do increase the risk.
It goes far beyond the visible security, though. The organizers are making sure information security is safe as well. That includes emails, phone calls, and any electronic documents. In a statement, the organizers write, "The World Economic Forum takes information security seriously. We look at it from various angles, ranging from our reports drawing attention to it as a major area of global business risk to an operational level. We employ encryption technologies where required and subject ourselves to external and internal audits."
This is the place where business meets politics, meets philanthropy, and meets the arts. It's the place where Nelson Mandela first found capitalism, and it's the place where Bill Gates and Bono make some of their biggest philanthropic announcements. It's also where some of the big mergers and acquisitions, the seeds of those deals, planted here. So what are going to be the big headlines this year? We're going to have to see, but there are some big names here this year. The Secretary of State Kerry is going to be joining Davos, as is the Secretary of the Treasury, Jack Lew. Also Netanyahu, along with the President of Iran. For Nightly Business Report, I'm Andrew Ross Sorkin in Davos, Switzerland.
Some of the biggest names in oil exploration and oil field services are seeing higher profits these days, and that's thanks to strong performances outside the U.S. energy boom. Morgan Brennan has more on what's energizing profits.
Don't credit the energy boom sweeping the U.S. for helping out Schlumberger, Halliburton, and Baker Hughes. Instead, look overseas. Analysts say they've been expanding their international operations in search of bigger profits.
That's where a lot of the growth is, at least historically. You've seen strong growth not only from a demand perspective in emerging markets, but that's also where a lot of the resource is. So again, it's just a case of follow the oil, follow the money, follow the growth.
Markets like the Middle East, Africa, Asia Pacific, and Eastern Europe have fueled strong revenue growth for the biggest oil field servicers. Case in point, Baker Hughes, the world's third largest servicer, saw a 27% increase in revenue growth from its operations in the Middle East and Asia Pacific. The other big growth areas, Europe, Africa, and Russia. Schlumberger saw revenue increase 18% from its Middle East and Asia operations as well, and Halliburton up 13% in the same regions. All of that compared to low single-digit growth in North America. So why is the international market so strong? Less competition and milder regulations mean more offshore drilling, and offshore drilling means bigger profit margins.
If you look at international capital spending, it's about 70-75% of capital spending. A lot of the oil service companies, their revenue is 50-45% North America. So it's really a reflection of the investment they've made in recent years to catch up with that mismatch.
It's not as if the companies are abandoning the energy boom in places like Texas and North Dakota. Far from it. The service companies all peg those regions as key to their growth going forward. But analysts say that in the rush to cash in on North America's energy revolution, the stocks positioned to benefit overseas shouldn't be overlooked. For Nightly Business Report, I'm Morgan Brennan.
Activist hedge fund Third Point Capital has taken a major stake in Dow Chemical, and it's pushing for a spin-off. And that's where we begin tonight's market focus. Third Point, which is run by the investor Dan Loeb, has a $1.3 billion stake in the company, which is the firm's largest investment by dollar value. The hedge fund is pushing Dow, the country's largest chemical maker by revenue, to sever its petrochemical business to improve its performance. Shares rose more than 6% in Dow Chemical today to $45.93. The Oreo cookie maker Mondelez added activist investor Nelson Peltz to its board. That deal ends Peltz's campaign to have the company sell itself to the beverage and snack giant PepsiCo to generate more profit. As hopes for a merger faded, shares fell more than 2% today to $34.45. AMD posted earnings after today's close. The company swung to a profit as sales of new gaming consoles helped offset the falling demand for PCs. The chipmaker, however, posted a weak outlook, and that disappointed investors. Shares initially plunged after hours, as you see on that graphic. The stock ended the regular session down slightly to $4.17. And shares of the struggling smartphone maker BlackBerry spiked after it landed a big government contract. 80,000 BlackBerry devices will now be linked to the Pentagon's management system at the end of January. That secures the company's position as the longtime supplier of government phones. Shares popped more than 9% to $9.93.
TD Ameritrade was popular with investors today. Quarterly earnings surged by about 31% from last year. The company says that's because more customers felt confident about trading in the stock market, as well as improving commission and transaction fees.
Our investors, our client base has been investing all the way through this. If you look at our investor movement index, it's been climbing now for a good 6, 7, 8, 9 months. We had 1 month where it went down, but it's at the highest level since we've tracked it for the last 4 years. And so it's been pretty healthy.
Rose about 4.5% to $33.85. Now, shares of FireEye took a hit after J.P. Morgan downgraded the cybersecurity firm to neutral from overweight. The analyst said the company is an innovator, but slashed its rating because of valuation concerns. Shares tumbled more than 5.5% to $69.44. Target's data breach drama continues. Cowen & Company downgraded the retailer's stock and slashed its price target. The analyst is expecting Target to indefinitely suspend its buyback, which she said is a, quote, key support for the stock. Shares tumbled nearly 2% to $59.20. That is a 52-week low. And how about Google trading at $1,405? Well, that's the new price target from 2 leading tech analysts today. Credit Suisse cited the company's continued growth in ad revenue, and Pacific Crest says it expects strong fourth-quarter earnings. Google shares were up 1% to close at $1,163.70. And coming up on the program, what's causing the tug of war between energy producers and domestic refiners, and what it might mean for you, the consumer.
Mohamed El-Arian, a familiar face to NBR viewers, is stepping down as CEO and co-chief investment officer at PIMCO, the world's biggest bond fund operator. El-Arian says he will stay with PIMCO's parent company, the German giant Allianz, after he steps down in March. He'll serve as an advisor on global economic and policy issues.
With the U.S. currently producing more oil than it imports, the prospects for even more domestic production are good, perhaps enough to begin exporting again to the rest of the world. That's causing a tug of war between energy producers and oil refiners. What does all that mean for consumers? Jackie DeAngelis reports.
Boomtown, USA. It's here and here and here. Shale oil would push U.S. oil production to highs not seen since 1971, so says the International Energy Agency. And analysts say U.S. energy independence is on the horizon, the year 2020. Increased production is driving up supply. The upside for consumers, lower oil prices, maybe cheaper gas, maybe lower heating bills. We may even have more energy than we need, which has led to a debate over what to do with the excess supply. Energy producers hoping to find more buyers and higher prices are lobbying the Obama administration to lift a ban on U.S. exports put in place during the Arab oil embargo back in 1973. Domestic refiners who buy crude oil are pushing back.
The debate over crude oil exports is one about dividing up the pie between the crude oil producers and the oil refiners.
Andy Lipow is an oil industry consultant who says that domestic refiners are enjoying an advantage right now because the supply of domestic crude is up, making it relatively cheap compared to global oil prices.
If the U.S. were to allow crude oil exports, I expect that the domestic crude oil price is going to rise to world oil levels.
Some experts say it's way too soon to be having this debate. The U.S. is still importing roughly 7 million barrels of oil every day, just under the 8 million that it produces on its own, making the export debate a non-starter.
We are still a long way off from oil independence. One of the things that we do have to look forward to is U.S. production combined with Canada and increases in Mexico could make North America oil independent.
Traders are also saying that global crude prices, now above $90 a barrel, would have to come back down close to $70 a barrel, so the markets could absorb a spike in price. In the meantime, producers will continue to battle with refiners as both sides look for ways to turn black gold into cash. For Nightly Business Report, I'm Jackie DeAngelis.
And finally tonight, we're only 2 months away from basketball's March Madness, but things are already getting a little crazy. The mortgage lender Quicken Loans is teaming up with Warren Buffett's Berkshire Hathaway, offering a chance at a $1 billion prize for completing a perfect bracket in this year's men's college basketball tournament. Quicken is putting up the money. Berkshire Hathaway is insuring the grand prize. Now, you got to know that the odds of picking a perfect bracket every single game are 1 in 9 quadrillion. That's 9 with 18 zeros after it. But if you select the winner of every single game, Susie, you could get 40 annual payments of $25 million or a lump sum of $500 million. I say take the lump.
I say you better get your calculator out and start working those numbers.
Programming these numbers. Absolutely.
That's Nightly Business Report for tonight. I'm Susie Guerra. Thanks for watching.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you in part by...
Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus service is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NBR.
I'm Susie Garrett with a nightly business report news brief. Shares of IBM tumbled after the market closed today after reporting better than expected earnings. Investors, though, were disappointed that revenues fell at the world's largest technology services company. On Wall Street, Dow Components, Verizon, Travelers, and Johnson & Johnson reported solid earnings, but each of those companies had a disappointing outlook, leading to a volatile day of trading. The Dow lost 44 points, but the Nasdaq was up by 28, closing at a fresh 13-year high, and the S&P added 5 points. And college basketball's March Madness is 2 months away, but Warren Buffett's Berkshire Hathaway and Quicken Loans are offering $1 billion to whomever selects every winning game in the tournament. Be sure to tune into Nightly Business Report right here on your public television station.